started. So pretty much following on our bias from Tuesday is where we pretty much had converted the bias. So as of last Friday, we were technically around here and we were anticipating a potential, right, order flow disruption, right? And if we were to have a transition here, then realistically we could see the entire trend essentially fall apart. So we already explained how there was really no transitions here, and because our immediate structure was taken out, that signifies an internal bullish liquidity grab, which now is in alignment with previous structure. So we said any type of dip would realistically give us, you know, the pretty much the green light for anticipating, right, new highs. So that did not happen. There was an internal, right, SR created. Let me delete that. There was an internal SR created after liquidity was taken. You can see relative equal lows into a new high structural range. That is an incentive to want to continue higher because we are now within, right, a discount to anticipate higher pricing. So it was not necessarily clean here, but it was clean in EURUSD, where we do analyze, right, transitions, right, in terms of liquidity grabs, right? Because if we're looking at previous structure, we know that we are bearish. We know solidification of the range previously is due to, right, the continuation BOS shown here. So this, right, is essentially the beginning of a pullback, right, low into high, right, low, and then we do not solidify a high only until after we do this sweep. So this, right, is still the continuation of our, right, pullback. So it's only until we have the bearish liquidity grab based on a minor intraday, based on the first two lines that I showed, where realistically you can change the bias, right, that being these two. So let me actually do, right, and I know that we did not necessarily take out the full range. However, I am still anticipating a bearish move because of the immediate structure break, which is the same quote unquote logic as here, where we take out, right, the immediate structure, but not necessarily the entire structure fully, and you could still anticipate the continuation. So just the same thing here. However, the cool thing here was once we start to zoom in, right, you see a very clear turbulence point. You can see a clear transition here, meaning there should be some type of volume in this area, and that's what really can be a catalyst for, right, zone of interest and the invalidation being at the high. That's the only realistic scenario I saw this week, and it was pretty much the same thing for AU. Because there was, right, a London move here, or a pre-London move, I'm sorry, here, and this generated the order flow, and it only made sense to sell, right? We know where our previous direction is. We know the solidification of a range because this is where New York started, I believe. Yes, it is. And we see the bullish liquidity grab that begin to create the pullback. However, right, when we're in alignment with our previous structure, you can see it a whole different way by simply looking at bearish liquidity grabs that are in alignment with previous structure. And these are how you get your pretty much your high probability scenarios where you do see taps there. And that is pretty much what is causing our continuous move to the downside. So, right, unfortunately here we did not get the whole pullback. As we said, there was another scenario here which was during London as well. I don't think we had any moves during New York in the session. No, we did not. No, we didn't. All right, so that was the only move I saw during New York this week, and as of now, right, I am actually going to follow up with seeing how we're probably going to close for the week. Right, and that's looking very, very bearish. If you look at DXY, pressure's looking very, very bullish. Yes, it does. And with EURUSD, it's looking very bearish as well. So I don't see any type of deep retracement here. I think here these POIs don't necessarily make sense unless we start to see a full-on transition. So right now, right, it really only makes sense for us to know excuse me, for us to not go no further than our previous turbulence point, just because we had already shown signs here of a bullish pullback, which then immediately transitioned into the downside. So in theory, I don't see why this would continue or this would break. So as of now, I can really only assume, right, an immediate continuation, right, because that would also technically be, right, a minor intraday premium, right? But if we are to break this, then I would be more so a bit weary with the continuation to the downside, because let's say we do break up here and we now do this, then realistically that's internal unwillingness, a bullish liquidity grab from a minor intraday stance, which is kind of key here. And depending on whatever happens here, let's say we even do get transitions here, right? If we get another transition here, then that's going to dictate what type of range we're looking at. So, excuse me, as of now, right, it really only makes sense for me to follow the immediate continuation and aim for, right, important lows here. Same thing with AU, aiming for important lows. Same with DXY, you're aiming for important highs. So as of now, the bias has not changed from what we said on Tuesday, but right, I do want to see how far we go from a pullback perspective and see if we can actually get any type of discount, at least from a minor intraday stance. So cool. So do you guys have any questions today? I do have a question for y'all too. Any questions today? How you guys doing? Also, somebody had asked me about this, so I'll just go ahead and show it right now. It's only the 50%, in case people don't know about that. No background, font size 12, don't use that. 0, 1, and 0.5. Yep, that's kind of how it is most of these weeks. It's either all London, some New York, or some New York and no London. I don't really have many weeks where you see like every move happen in New York. Good, finding a 70% win rate this and last month, been a long time goal. Awesome. What changed? Okay, patience. Yeah, I mean, I guess a question I do have for you guys, let's see who is willing to answer it. Patience and acceptance has been a big factor for me this week, for real. Yeah, acceptance, that's probably a big one. Realizing you don't necessarily have influence on the market, so you can only take what you get. Better understand liquidity points helped a lot too. Awesome. Cool. So what is the ultimate goal of you joining RCV? What is the ultimate goal? What is the point? Let's see, can anybody answer that? What is the ultimate point in joining RCV? And I mean, you guys should know this. You guys joined. To be independent, To be independent, yes. So for most of the quote unquote, I hate to put it like this, but for most of the quote unquote better traders in the group, they don't necessarily get on calls anymore. They don't necessarily send me journals anymore, which is not something I'm complaining about. It's something I'm actually happy about, because realistically, that's the goal, for you to be independent and for you to not only be able to take your own trades, manage your own trades, but also reflect on your own trades. So obviously for most people in here, that may not be the case. You still hop on here because you may be missing something that you might not know of right now, but you might feel like you're missing something because you just necessarily feel like kind of stuck. So if you're feeling stuck, my question is, what do you think you're lacking right now? And I don't mean that to insult anybody in terms of maybe you're not independent and you are. If you are, awesome. And if you're not, maybe you're still looking at issues and maybe that's why you're on these calls. So my question is, what is your biggest hindrance right now? So what do you think? What do you mean by execution? What do you mean by execution? I'll get to the next one once he answers execution. Andre, what do you mean by execution? And then if you don't answer, I'll just move on.
Yo, bro. You hear me?
Oh yeah, hold on, let me mute my mic. Go ahead.
Yeah, when I say execution, I think for me it is, I would say it's two things: execution and confidence. Because yeah, you're learning the concepts, you're watching the videos, but then to apply them real time in the market, for me, no, I have been doing it, but I would say at times I would feel, I got the message about this also. I think at times for me, even though I'm applying the concepts and stuff, and how the market conditions have been for me recently, I realize a lot of moves may be happening in London. And then for me, I think I am not executing enough trades to say I'm putting in the work. And then due to the fact I may not be in the market physically at times trading, but I may be marking the charts, doing analysis, seeing structure play out in the way that it's supposed to by the analysis I've done, but actually not being quote unquote in a trade, but rather seeing it being played out has been a hindrance on confidence, because it's like mentally is like, you seeing the concepts work, but is like quote unquote rushing the process because you're not quote unquote in a trade profiting from the reps you're putting in.
Okay, so you see the moves play out, but you don't execute. That's what you're saying.
Yeah, pretty much.
I don't think that's actually a bad thing. I think you're looking at it the wrong way. If you're seeing, let's say you point out a POI or whatever, and you're doing this consistently, and over time you see them consistently also play out, I think that's actually a good thing, because I think the hardest part isn't necessarily finding an entry. I think it's finding the right bias, right? If you don't get the direction right, the execution itself really doesn't matter. because realistically, if you can tell the bias right, all you need to do is find some sort of continuation model in order to, you know, capitalize on the trade. So I think you saying that you see the moves play out as you want them to, but you don't make money off them, isn't necessarily a case of execution. I think it's a case of FOMO. But tackling that is, it's kind of a hard thing because there is no secret to doing it. You know what I mean? Because unless you're actually doing it, then you can't necessarily gain data. So I think whenever you're doing that, where you're just letting moves play out, I think that's more of like what you're doing like day 1 or day 2 or day 3. I think that's what you're doing at the beginning of your process, is trying to make sure you get the direction right, and then figuring out how you can capitalize on those moves that are, you know, in your favorite direction. So I would say stick to your trading hours, stick to your models, your POIs, but actually just start executing. And that does not necessarily mean you have to risk your own money right now. By all means, trade demo until you feel comfortable actually executing a trade, but you know, the real game starts when you actually start trading live. Let's see, next one. Rushing the process and wanting to get results right away. That's a pretty common issue, and that's just, I wouldn't necessarily blame that on you. I would blame that on trading as a whole itself. Like trading, you can load up, you know, many brokers tomorrow and start trading tomorrow. The barrier of entry is super easy, and there isn't necessarily a you know, step-by-step plan as to how you should go about trading. But realistically, just know that this takes easily 2 to 3 years in order for you to actually do something with it, because you should see it more as a profession and not necessarily as just some side hustle that you're just doing, because analyzing financial markets is a genuine skill, you know. So you must give time in order for that skill to manifest and actually become something of value. So I would say stick to the process, pay your dues, but also, just because you've been trading for 3 years does not mean you've been trading for 3 years. Also be accountable of when you've been trading, how often you're noting, you're journaling, you're reflecting, right? All of that also falls down, because it's not just about how long you've been doing it, but how long you've been doing it efficiently. That's pretty much what I would say to that. Finding the right model. The right model is subjective. There is no such thing as a right model, only a right model for you. I tend to be too conservative in times, which results in missing trades. Yeah, that's understandable. And in that case, I would say if you're trading M1, M3, zoom out to M5, M10, M15. And use the exact same model that you're doing, but all you're really doing is opening up the SL and letting, you know, focusing more on the minor intraday moves and not the scout moves. But realistically, what you want to do is win the trade, not necessarily get the highest RR possible in every scenario. So I would say just zoom out, because as you know, there isn't always going to be a, you know, M1 entry that gives you maximum RR. That's just not realistic. Formulating a bias or narrative and sticking to it. So that's two different things. Sticking to a bias and formulating a bias, that's two different things. I would need some more details on that. I think that's the last one. It really comes down to your models, yes. So I guess just something for reference for other people. Jordan, how did you go about your model for your creating your models? I'm sorry.
I'm gonna unmute because it's a lot to type, but I only have 2 models realistically. I based one mainly on basic structure breaks. I believe it's a version of the model you gave an example of in the model video on the course. And the other model that I tend to gravitate to is a disruption model. Sometimes I have like an unwillingness model I'm still trying to refine, but for the most part, I took what you said off that video and kind of built off it to my own understanding. And I took the disruption concepts and kind of did the same thing, as well as kind of gathering, oh, and a liquidity grab model, of course. But I grabbed a lot of what I built off of like Discord conversations and things I saw in the market that made sense to me, and just kind of dialed it down to where it literally made sense to me. I had to disregard pretty much everything that people were saying at a certain point. Obviously, like I said, I got stuff from the Discord, but once it gets to a point where you're refining it to your own understanding, you got to kind of block that out and figure out what makes sense to you, because there's some entries I take that won't make sense to some people, but they make perfect sense to me, and vice versa. Because you see it all the time with Coles and Tomas. So it's really just about understanding it's literally about understanding what makes sense to you. Literally, it doesn't matter what anybody else is saying, as long as it makes sense to you. That's the biggest thing, to be honest. For me, that's what's been the biggest thing for me.
Yeah, that makes sense. So if I listened correctly, you're essentially trading continuation BOS, double mitigation. That would be model 1, unless I'm mistaken there. Model 2 and model 3 are basically just failed conversions, if I'm not mistaken.
Yeah, exactly.
And it's good to simplify them like that, because you're really seeing, the bigger picture there, because that's realistically what we're trading.
Right.
Cool. So I guess just Ricardo's the last one. Formulating a bias and sticking to it, those are two different things. So if you want to talk about it, definitely give me some more details. Cool, and outside of that, does anybody else have any more questions? And if you don't, I'll show you guys something cool I've been working on. Cool, yeah, so Ricardo, no more details, but basically what I'm getting at is, yeah, no, of course, but so this is, I'm talking about issues after you've gone through the process. So if you haven't been through the process, I would say, if you still have the same questions about this, definitely just let me know in your journals and stuff, because the number one thing is definitely figuring out the direction. Let me actually, I've been working on some courses. Been working on some courses. I actually purchased these visualized value courses, and I've been going through them, and they're actually very, very good. You guys know I've been following this guy and sharing this guy for a very long time. I obviously won't show you guys what's in it, right? But he has them super cheap right now. I think they're like 150, but the entire point of his courses is, right, how to visualize value and build once, sell twice, how to visualize value pretty much. This is like his literal edge. He shared his edge, and I thought that was super interesting. It was essentially that people understand images more than text. So if you can simplify your ideas into an image, then realistically almost anybody can digest your content, and I thought that was super interesting. So this is pretty much understanding branding and understanding value from just the actual raw point of value, not necessarily what is valuable, but what is value itself. And this one is actually, I'm still going through it. It's super long. But build once, sell twice. I mean, RCV is like a type of derivative of that, where you built once and sold it X amount of times. And his entire thing is building systems to make your business efficient, to, you know, save you time. And I thought this was super interesting. So if anybody here, does anybody here do any type of business work or have their own business outside of just trading and working? I wonder if anybody in here has their own business. I know we have somebody in the group that does credit. We have other types of business owners. We have athletes. I don't think anybody in here owns an actual business. But if you're ever thinking of making a business, especially an online business, this is awesome to get into. Awesome to get into. Oh yes, of course, I know you do. But yeah, his stuff is cool. It's I don't know how you can buy these, just so I can show you how much they cost. Yeah, see, this is what they cost right now. 150. Definitely a great investment. Great investment. But yeah, that's a pretty cool thing. If I create another brand, I'm definitely going to be using these principles, and I thought it was pretty cool to show you guys. But yeah, that's kind of what I've been doing on my free time. Yeah, so does anybody have any more questions? Cool. But yeah, the bias hasn't changed, and I guess we'll see what happens by the time Tuesday gets here. All right, then. So you guys have a great weekend. Excuse me. I appreciate you guys hopping on.